Hi friends, let's take a look at Tezos versus the Bitcoin Oz and Tezos versus the dollar Oz. Thank you so much for tuning in. As we did in yesterday's episode, we adjusted this parallel channel in the background so that it would fit on the price action a bit easier. Given encompassing these lows before. And I always talk about how they're subjective and that they're never perfect, right? And I've still not done it perfectly. And you still could adjust this, right? Pardon me, so that actually encompasses the whole of the price action and suggests that we haven't broken out of it. But there is a bit of a negative narrative here that's being sort of, kind of put through the washing machine a few times. I do want to see us kind of turn it around, right? I do, and I think that we can. Looking here at the 4-hour time frame, you can see that this low is lower than this low in price action, whereas we're actually, putting in a bit of the old bullish divergence there on that oscillator, and indeed down below on these other oscillators here in terms of the lows, other than perhaps the DMI. And in terms of the highs here, then is this hidden bearish? Kind of class B hidden bearish divergence just there. So we do actually have a bit of a struggle of the divergences in a sense, but generally speaking, what we're looking at is what's this? Yeah, sweet. So generally speaking, what we're looking at here is this sort of fallen wedge structure coming to a climax potentially fairly soon. If we just draw this on the charts for ourselves, coming down here from say this high over there down to here. So you can see that we've got this kind of coming in here. Would we get a measured move off the back of this? Well, if we did, it isn't going to be very much. It's just going to take us back up to a zone where we could really say that perhaps the dynamics are changing on this thing. I'll leave that line on there for now. I know the charts are a mess. If you want to have a laugh about the charts being a mess, check out today's Chainlink episode. I have a good laugh about messy charts on that one. And a shout out to Paul. And then going down the way here, if we do break above it, that'd be quite good. You've got the 50 simple moving average. Actually, I'll take it off so you can see the moving averages. Got the 50 simple moving average coming in at where that yellow line is, no less. And if we were to come up above this yellow 21 here, then the yellow 21 moving average, exponential moving average, then of course we'd be back inside what could be conceivably where the parallel channel is, and actually I can move this and adjust the Fibonacci retracement I've got to encompass this wick over here. Did see the wick go all the way down to that 26,000 price point. Obviously that's not great for the old bullaz, but the trend has been, in terms of, you're looking at this 4 hours since we had this head and shoulders over here, has been this head and shoulders giving us this medium term reversal pattern here, has been showing us that we've got some downward price action since, and we're waiting for that to finish, or else it's going to keep going, right? But it's the trend is your friend, and so far in terms of the 4 hour time frame, that's the trend, right? That's what it's been. We have some bullish divergence now, at last here in the last little bits of this, providing that it doesn't just keep going down. If it keeps going down, then there's no bullish divergence there, and you're just going to have to eat it, right? And that's that. But we also see that the ADX here is still not made it into 20, confirming this real strength in this trend towards the downside. And actually, it was only really last above 20 over here. Since then, in this zone here that we're looking at, we've actually seen the ADX kind of really taper off and go back down below 20. Now it wants to come up again, sure it does, but that's what we're looking at overall. That's why we're at this question mark point here, and why it could potentially be a bottom for us. Of course, it could just keep going. Sure, could do. Could. Let's hope that it doesn't, though, and hope it goes on, because if we do move up towards that 50 simple, it now ties in very nicely with the 236 Fibonacci retracement. That would be quite good. If the trend were to continue in terms of like this 4 hour time frame trend since the 12th of August, which has been towards the downside, then maybe you could see 34k even getting hit as part of a healthy retracement right towards the median line of this parallel channel. Now, if we do move back up towards the median line of the parallel channel, then of course we could be looking at things being quite positive. And like I said at the sort of outset of this show, I could adjust this so that it fits the charts properly. As you can see, we pushed out past it here at the top ends of it. I've not got it on there perfect, but I don't care about doing it perfect. This is actually to enable you, to educate you on how to become a better trader, not to kind of, trying to make perfect subjective charts on here, which obviously are determined in no small part by the time frame as well that you're looking at. In terms of the hourly time frame, this low versus this most recent low, which of course then comes in here as being bullishly divergent, is the sort of healthy looking style point to be able to say, look, maybe I'm willing to take a long from this point here towards the top side. Talk about taking targets, do come back in at our previous sort of resistance or support targets, obviously. So, 29,000 would be one of them. This zone here at 30,000. And then, of course, the 382 at 30,087, 30,870. And then and then the 50% at 32,333 or so, and then the 618 zone coming in there at 34k. Okay, that's what we're looking to overall. The volume here is potentially going to be able to pick up again. As you see here, this is a big candle here on the 1 hour time frame relative to all these recent ones during this downward sloping price action. Could this be considered, I mean, you might not find it very easy to see, but could this big candle here be considered to be stopping volume, instead, as opposed to a pickup of the volume? Could it be considered stopping volume? There only really are two types of big volume, that's stopping and starting. Okay, let's go over to the dollar prices and see that this is exactly the same story, but it's minus this bullish divergence here on the dollar pricing. Okay, so that's not so great. We come down here towards this zone of the white background sort of parallel channel where we were previously negative. When we moved outside this zone, things could have got quite good for us and been quite positive, but they haven't actually managed to do that overall. And instead, what we've come down to is back down towards the parallel channel in the background. But not only that, there is also this purple parallel channel. I'm not sure if you'll be able to see that very easily. Let's make it yellow so you can see. Let's make the middle line yellow as well so you can see. So that we came right bang on to that there target, and that's where we're finding in terms of support. Movements down past this zone right here at this overlap territory. It's one of these lovely times whenever you've got two different things, making a cross on the chart showing you not only where but when the price action could be of significance, and that's where we find ourselves right now on that zone there. Movements down past the $3 area being, of course, offering up a tasty sort of 10% move to down at 270s area if you're trading it sort of with the bearish stance. And if you're trading it with the bullish stance, perhaps this is offers up a fairly low risk, manageable long entry for you if we were to move towards the top side. Let's jump up towards the 4 hour time frame, drawing a Fibonacci retracement going down the way here, encompassing this downward trend, and see if there's some sort of area for us to be aware of in terms of the top side targets if we were to move up again. And of course, that comes in at $3.31, right in here at where this inflection was, right where we moved outside of the parallel channel in the background, the white one. Going out sideways, and just up over here above this orange line. So movements up above all of this, obviously very crucial for the positive case. That could be the case. That could happen. Of course, we all have that. This is all totally in play for us if we were to be. And we do have a bit of the old bullish divergence on the stochastics as well. Okay, so while it might not be on the last 2 points here on the 4 hour time frame, this is what I'm looking at now. The 4 hour time frame on the RSI and these last two lows, they're just this one and this one. It is on the stochastics, but perhaps more importantly and accurately to describe it, what you have here is the previous low coming in this parallel channel region before we came outside of it, in at the median line at 315, and we've got a lower low than that in currently as well. And what we have is this low and then this low, and that is of course bullishly divergent, and this one in between was really just flux along the road. Okay, and on the stochastics, that's the same deal. We've got that bullish divergence, and the same deal as well on the MACD, with this sort of minuscule little low here coming in as if to sort of tempt you into thinking that it's just convergent, when in fact in the sort of broader term it really is divergent with a bullish stance on that one at this point. So it could turn around from here. Of course, the trend is your friend till the end of the trend, yada, yada, yada. I'm not going to have to repeat that a million times. And of course, it's totally valid if you wish to play this in negative stance, looking towards downward price action. If you want to, you can, okay? Nobody's stopping you. Certainly not me, because I do that all the time. DMI, I want to see this, or the RSI, I want to see this moving up past this, past these previous points here without hidden bearish divergence, right? So I want to see this swinging past those zones, or those key sort of resistance zones that we have, and not just then swinging back down the way and being hidden bearish divergence. And namely, I want to see that then putting in a high up above 340. Of course, that's 10% up from where we are right now. So there's your 10% upward side target for you if you want to trade it that direction. And, then therefore you could be looking between the sort of $3 to 270, or up to 340. What would you give you an idea that you might be on the way towards doing that? Well, perhaps, if we go up towards 320, 10 cents up from where we are now, then we could go up towards the 340s, or even if we were to push past that and go up and hit our 382, then you get that full 10% at 350. Okay, so that would be your sort of ups and downs targets for us. If we bring up the DMI and just look at it then as well, you can see that we've moved past the The negative is obviously expanding, but as the ADX has gone down below 20, so you could say that there isn't the trend there to really put your money on now, that you would have had to have done that from before over here when we swung back down the way. And of course, which would have been the way to do that at the time, as you can see quite clearly there. So again, as well, I have a video about the DMI you can go and watch. Very educational. On the 24-hour time frame, you're not seeing that divergence between this low and this low here, given the way that the price action's really worked out necessarily, right? But if this were to be a local low, then maybe you could say that it's just at the very tail end of it here. Not great though for that. And the MACD is the same sort of scenario overall, where we've come down lower. However, this isn't lower than the price action over here yet. So, if we move down past it, maybe you could look for that, but it's not lower yet. It's actually higher, in which case you would call this hidden bullish divergence, right? So let's just see if we can move back into the pitchfork. Now, the pitchfork itself is obviously of significance for us. Trading this has been very easy if you had the same pitchfork drawn on your charts, because as you can see, when we moved outside of this zone here, that's when we saw the drop down in the price action. So support here, support here, support here, not failed support here, drop down in the prices. Okay, so it's easy to trade this with a very, very low risk profile, giving you an easy ability to manage your trades and at that line. So full responsibility lies on behalf of the person doing the trading. That's yourself. It's on you to kind of know these things. I do point them out in almost every single episode. So nice one. That's why you subscribe here, of course. So let's see if we can move back above the 236, move back into the pitchfork, and have these upward side targets being a possibility for us if we can then push past our previous high over here, so that we can throw off the chances of there being sort of that hidden bearish divergence. And of course, perhaps even, start to look towards a trend towards the top side, which is obviously going to be characterized by higher lows and higher highs. So then we can see if they're going to be divergent going forth from that point, right? Moving on and looking over, let's just dive straight over to, let's look at a couple of things of note. This big rising wedge, so you can't say I didn't tell you in advance. You can't say I didn't warn you. And what would be happening with this thing? Where have we come to? Right bang on to the lower end of it. Of course, movements outside of this, you'd be asking, are we breaking out or faking out? Going to have to consider fake outs on this one, because we like to do this on the channel. We'd have to be in this zone here if we're going to be faking out. So anywhere in this zone, and you're just looking at a fake out potentially. So movements past the lows that we have over there at 220, and you've got a very much a very negative potential for a downward side price action. Let's not get too carried away though, because indeed we could see things moving towards the top side afterwards, and ultimately at some point along the way, if we get a fake out above this zone, we might even be able to convert this into a parallel channel, and then it no longer be a negative price pattern overall for us. And indeed, a fake out into this zone towards the low side would also enable us to convert that into a parallel channel, where you'd be taking this white line, instead of going up there, it'd be going along here, and then it'd be just a positive parallel channel towards the top side, talking about long-term bullish price action in the long run. So let's not get too carried away about any movements past this zone. But the fact that we've come here and then at the minute is, of course, a big tick to technical analysis, because we've had this drawn on the charts for a while. Okay, talked about it in the past. The price point at this is like 287. So we spoke about that. The lows today, 289, right? So we've spoken about that. Tick, tick, tick. Nice. Here, hit BTC, right? Yes. So movements failing to go above this line here, failing to take out the 21 EMA, all that very negative, and then we've come in here and we've gone down towards the median line of our parallel channel in the background, because we failed to break outside of the parallel channel, and all we've come to do is the median line. So can you see the benefit of technical analysis? Stop looking for coins that just pump and pump and pump, and act irrationally in the face of technical analysis. Instead, find coins and things like that work really well for technical analysis. It's definitely, of my opinion, that this is definitely one of the best, I'm not underlining that, assets in the world for trading in terms of its technical analysis and everything else. It's definitely one of the best. So if you want to become a good trader and you're a scaredy pants looking at this and not knowing how to trade it, then I'm afraid you've got a ways to go. Yeah, that's totally cool though, because that road that you're looking at there and that daunting task you see ahead of you is the distance between yourself being an independent, self-reliant, consistent, profitable trader, and of course, you having a skill for life that will always be there for you, because these things are as whole old as the hills, I tell you, and it's not going away. The markets will always be there. There's always more opportunity for you. So that's fantastic. We come in here, hit the median line of that channel. That's all great. What we're looking to at the minute is whether or not we'll come down towards our next lower line down there at 250. That would be quite crap, I have to say, but you could short it down there if that's the case. I'd rather see it ticking up from this point here and moving towards the top side. I've probably said similar things like that a million times, but of course I'm going to remain agnostic and have no bias on this and happily trade it either way, regardless of what things are really working out for us. Zooming back in again here, having moved up the price action a wee bit. Let's take a look at how this is forming for us in terms of the 24-hour time frame. This is obviously not in this chunk here bullishly divergent. You see the lows are lower than the previous ones as we have lower lows. But what could be seen in the broader term perspective from this low over here to this low over here is that there is indeed a low here, which is then lower over here while the price action is higher, and that gives you hidden bullish divergence, potentially opening up the opportunity for the continuation of what is indeed, from a macro point of view, an upward trend, right? It really, really, really is. And we've also discussed where the potential for further downside action would take you in terms of still remaining bullish from that parallel channel point of view. Okay, so lessons upon lessons. I hope you're really taking something away from this. It's definitely, in my opinion, there is no comparison. That there's no channel out here which on YouTube that cares about the subscribers anywhere near as much as I do, and really wants to deliver these lessons in terms of how to be a technically proficient trader yourself and actually become a long-term, self-reliant, independent, consistent trader. There's none, all right? And I dedicate myself to this for the benefit of the Tezos community, all right? I really hope you see that. I say all of this, in the full knowledge that at some point in the future, I could just ditch all of what I'm doing here because, whatever. But don't worry, I'm not going to do it anytime soon. So yeah, that's what we're looking at. Will we get anything else outside of this here? Yet to be seen. Remains. There's plenty of aspects about this which could give you the rocket fuel that you need to get that upward side movement. Looking towards targets, for instance, over here on HIT BTC at $4 and about 433. If we're on the other charts in terms of upside targets, where don't be too greedy and take away any profits that are on the table at that point. But of course, unless the 144 and the middle line of this parallel channel actually operate as support for us, things could be kind of negative. Looking down the way then at this in terms of the 4-hour time frame and where we've come from, well, the most recent of lows has enabled us to have this sort of bearish continuation between this low here. No, it's not. Sorry, it's bullishly divergent. So you got bullish divergence here between these two lows. Okay, so that's what we have right now. If we turn around, that's good. Of course, this could just keep going down, in which case it's premature to say that, and it might not happen. Have to always underline that 50 billion times. People don't seem to know. We've got this bullish divergence that was showing up over the course here, which meant that we did have a fallen wedge on the go, of course, or indeed a symmetrical triangle, depending on your perspective on this thing. Depending on your perspective, of course, or maybe perhaps this descending triangle, and that still remains the case. And are we just going to go into fake out territory for this descending triangle and then get a move towards the backside of it? That means looking towards $3, of course, just sort of maybe 10 cents up from where we are now, actually, or more, really, maybe 20 cents up from where we are now. So we could break back into this area, would give you the chance of that happening, and then be able to confirm this as being bullishly divergent. Currently, that's not the case because it's premature, but this is us anticipating it in advance. And I could look at Ethereum. Let's look at Ethereum. We moved on beyond that zone. Generally speaking, we would need to have had another sort of one in here. I'd given us a roadmap ages ago for all of these targets towards the downside. So maybe I should do another one, but instead of that, for today, in today's show, I'll do it in tomorrow's show if we continue on. I'm going to point out that 79 or sort of 0.08 is, of course, where the 236 is on this one if we do see movements towards the top side. And that's just from the most recent of swing highs. I've actually taken it up to the sort of the most, the most recent failure and around a sort of a twin peak type strategy or mentality down to where we are now. Then the highs come in. The 236 is at $8, 0.08. 5, which was a significant zone for us on the downside. We talked about it for a fairly numerous amount of times. If we do continue to go down the way, then maybe we'd be looking at something like this on the go, where we have this parallel channel or whatever. This is, of course, bullishly divergent low if we do turn around at this point here. Again, like we've spoken about on the other charts, and we have but we actually don't have that bullish divergence coming in from this section here. So this section here is actually downwards with a convergence on the MACD, the DMI, the Stochastics, and the RSI. So this has not been positive, and we would need to see that dollar pricing really actually do its business for us to then get that to then lock in and confirm these things. Otherwise, we're waiting for it to happen. Tuning out. I've been Rocky Outcrop. I'll be back again tomorrow with more technical analysis. Honest to goodness, this is too good to be too good. So I'm going to have to diminish the amount of time that I spend on these episodes. It's far too much time for the reward. It really is. Like, it's professional level technical analysis, professional level on a coin. And there's very, very, very few coins out there that actually get it. Search on Google or for technical analysis. It's actually professional level. It's all just CoinMarketCap journalists and stuff like that, and bloggers. It's blogger level is what you normally have. This is actual professional level technical analysis, for free, given away for free. Makes me laugh. I'm doing it because I want to see the impact that on, as a longitudinal study on the coin, which I quite like, and I talk about it a lot. And how does having technical analysis really affect this? Now I get approached by other coins. I got approached by Electronium, who seem to be too cheap to pay me to do this on a daily basis, right? And I do this for free. You don't get any money. This is not sponsored by Tezos. No way. It should be, don't you think? Don't you think it should be? I think it should be. Let's see what effect it has putting out daily videos on YouTube for it. Let's see in the long run, if I do this for like a year, how it actually affects the way that people perceive this coin, because it's been out since 2017 and it remains somewhat unknown and somewhat of a joke in many aspects of the world. Does, right? With the sort of the family of the Brightmans and how they, the crap at the top of it, where the way they did it. But it's actually a really good, solid project where they're not violating any of the SEC rules about being a security. They got STOs coming up on them. There's a lot of exciting stuff surrounding Tezos. A lot of good stuff surrounding it. So will me doing this professional level stuff help in the long run? I think it should. And it should definitely make it so that more people are able to trade this successfully, and then there'll be more positive stories out there about it and how I made $1 million trading Tezos or some crap like that, somebody say one day. In the meantime, I'm not seeing any of that. Not seeing it, right? Anyway, I'm finding it interesting. Not seeing it. I'll be back again with more professional technical analysis tomorrow. YouTube.com/Rocky Outcrop. Share it with your friends. Really do appreciate it. Join the Discord. It's all good. Thanks so much. See you next time.